3 weeks ago, I noticed something happening in the UK rental market that didn't make sense, and the deeper I looked, the clearer it became that the public is being shown one version of the story while the real situation is playing out behind the scenes. What I found explains why rents are rising while available properties are shrinking, and why thousands of landlords are quietly disappearing from the market. If you rent, if you're a landlord, or if you're planning to buy, you need to hear this. I started with a simple question. Why are rental listings dropping across the UK even though demand has never been higher? It wasn't just London, Manchester, Birmingham, Bristol, Glasgow, Leeds, all showing the same pattern. Fewer listings, higher prices, and sudden changes in availability. So I began tracking listing data daily from the major portals. What stood out immediately was that properties weren't being rented. They were being pulled, removed quietly, not let, not sold, just gone. At first it looked random, but after a week of checking timestamps and matching removals to public records, a pattern started forming. Properties were disappearing in clusters, often in the same postcode, on the same day, sometimes within the same hour. That shouldn't happen in a healthy market. Owners don't coordinate removals by accident. The next step was to look at who owned the properties before they vanished. That's where the picture changed. A growing number of these removed rentals were traced back to individual landlords who had recently sold up or registered notices to exit the market. Not because demand was low, not because yields were terrible, but because the operating costs, regulations, and compliance requirements introduced over the past year have made small-scale renting financially unsustainable. Most people have seen the headlines about rent caps, inspection requirements, licensing changes, EPC upgrades, and landlord taxes. But what most people haven't seen is the internal modelling behind these policies. Independent analysts warned months ago that as many as half of small landlords were likely to leave within a year. And that's exactly what we're seeing now. Landlords leaving isn't just a side effect. For some policymakers, it was an expected outcome. So the obvious question is, if individual landlords are being pushed out, who is stepping in? Because the properties aren't disappearing into thin air. They're being absorbed, consolidated. The UK's new rental stock isn't being controlled by tens of thousands of individual landlords anymore. It's being quietly concentrated into the hands of corporate operators and institutional buyers. What's important isn't that large companies are buying property. That's normal. It's the timing of the purchases, the scale, and the strategy behind it. Institutional buyers have been increasing acquisitions specifically when regulatory changes create pressure points for small landlords. They have the capital to buy in bulk, they have teams to handle compliance, and they benefit from economies of scale that individual landlords simply cannot match. This shift isn't hypothetical. You can track it directly through land registry filings. In several regions across the UK, bulk purchases by large operators have increased sharply in the exact months where small landlord exits spiked. It's effectively a transfer of ownership from individuals to corporations. And when that happens, the rental market changes. Corporate landlords don't operate like traditional landlords. They implement dynamic pricing systems, automated rent adjustments, bundled services, and digital tenancy monitoring. In other countries where corporate ownership has taken over, rents have risen faster, tenant choice has shrunk, and service fees have exploded. But what's happening right now in the UK is bigger than that. Institutional buyers were prepared to expand steadily, not to deal with a wave of forced sales all at once. And then something unexpected hit the system. A major investment fund backing UK rental acquisitions changed strategy. They slowed investment, redirected capital, and in some regions paused buying entirely. That single shift was enough to expose just how fragile the current market structure is. With fewer corporate buyers active and thousands of landlords trying to exit at the same time, the market began to wobble in a way nobody had modelled. For years, the assumption was that institutional buyers would always be there to absorb the properties small landlords couldn't hold on to. That assumption just broke. When corporate demand slowed even slightly, it exposed how dependent the UK market had become on bulk purchases. Suddenly, instead of properties being snapped up within hours, listings started lingering. Some areas saw a backlog build almost overnight. Prices adjusted far quicker than anyone expected, not because people weren't willing to rent, but because sellers were competing with each other during a moment when buyers were no longer moving in lockstep. Demand hasn't fallen. It's at record highs. The imbalance is happening because supply is being redistributed at a pace the system simply cannot absorb. Thousands of rental homes are being pushed through the exit door at the same time, with nowhere for them to land. In key UK cities, the total number of available rental properties has dropped sharply, even while the number of people searching has increased. In parts of London and the southeast, the level of available rental stock is the lowest it's been in more than a decade. In Scotland, landlord exits have hit a 5-year high as new short-let rules, licensing requirements, and tax changes squeeze out smaller owners. In Wales, mandatory licensing, higher inspection standards, and enforcement crackdowns have created pockets of severe supply shortages. And in Northern Ireland, rental competition is so intense that tenants are offering months of rent up front just to secure a viewing. This isn't a local glitch or a temporary correction. This is a national restructuring of the rental market happening in real time. What makes it even more concerning is that the official data being released doesn't match the severity of what agents and landlords are seeing on the ground. Several councils have stopped publishing detailed rental statistics entirely. Some portals have quietly changed how much historical data they display. Transaction records that used to be fully open now require special requests that often go unanswered. Even national reports, which used to be updated routinely, are suddenly delayed for data verification. When transparency disappears at the exact moment the market is under the most strain in years, something is wrong. Independent data paints a very different picture. Letting agents are reporting an unprecedented drop in available stock. Property managers say turnover has collapsed because tenants are staying put out of fear of not finding a replacement home. Landlord associations estimate that tens of thousands of rental properties have already exited the market this year alone. And the most worrying part, many more are expected to leave before the full impact of new regulations lands in 2025 and 2026. Corporate ownership is rising. Individual ownership is falling. And as individual landlords pull out, renters are paying more for fewer choices. Competition in some areas is reaching levels that agents say they've never seen in their careers. Yet the policymakers who designed the regulatory landscape appear to have no plan to stabilize the sector or address the root issue. Once small landlords leave, they rarely come back. And once large corporations gain market share, they rarely give it up. The truth is simple. The UK rental market isn't collapsing because demand is weak. It's collapsing because the structure of ownership is being forced to change faster than the market can absorb. Landlords are leaving, corporations are absorbing what they can, investment funds are pivoting, regulation is tightening, and renters are stuck in the middle of a system that's being rewritten without considering what happens during the transition. If the current trajectory continues, the UK could end up with one of the most heavily concentrated rental markets in Europe, less flexible, more expensive, and far harder for smaller landlords to re-enter. That kind of market becomes vulnerable to price manipulation, rent inflation, and long-term instability. If you've noticed your rent rising, your options shrinking, or whole areas suddenly becoming unaffordable, it's not your imagination. It's the early stages of a structural reset. Once these shifts are fully locked in, reversing them becomes almost impossible. That's why understanding what's happening right now matters more than ever. If you want updates on what's coming next, what the real data shows, and how these changes will affect renters, landlords, and buyers across the UK, make sure you subscribe, so you don't miss the next breakdown.